Will the stock market rally fizzle out, or are we just getting started? I hope you all had a wonderful Thanksgiving holiday with your families and friends. We had everyone at our house this year, and we celebrated my daughter's engagement. It was really a fun time, and I enjoyed the closeness with everybody. I won't talk about the 5 pounds I gained in just 3 days of overstuffing myself. It's amazing how quickly it goes on and how slowly it comes off. But getting back to my question, will the stock market rally fizzle out, or are we just getting started? Well, if we look back at the stock market performance since the recent low point on October 23rd, 2023, so just about a month ago, not very long ago, you can see how the S&P 500 shot almost straight up off the bottom, like this. And then the slope moderated somewhat, and then the slope moderated some more. So should we be scared? Well, to answer that question, let's take a look at how the S&P 500 performed coming off other low points in the market. So let's get rid of these arrows, and let's take a look at a longer time frame. So if we look back over the past 5 years, we'll get some additional perspective on this. So let's take a look at the bottom right back here a year ago where we bottomed out, and take a look at how that one appears. So if we look at how it came off the bottom, it shot straight up, it then moderated its slope, and then it took off again. So it's not such a bad thing. You kind of need to consolidate after this kind of a meteoric rise. So things kind of went sideways to slightly up and then headed higher again before pulling back, as they would say, and correcting themselves. And then we get it all over again. And what about during the pandemic? Well, you can see what happened here. Absolute rocket ship higher, slight moderation in the slope, if you will, here. And then even slightly more moderation in the slope. And actually, you want to draw it to its ultimate conclusion. This went up for quite a ways here before it started to sort of falter here and then pull back. So from my perspective, this looks like totally normal behavior for the stock market coming off of a bottom. So with all of that as a preface, let's take a look at the metrics to find out how things look in the stock, bond, gold, and crypto markets right now. So if we take a look at the equity markets and how they performed over the last week, you can see we've had a very, very healthy rally here. Basically, the Dow, NASDAQ, S&P 500, and small caps are all kind of bunched up down here at the bottom with very similar returns for the week. But if you look at ARK Invest, the highest risk equities, they outperformed all of these other indices by 5 to 1. That's amazing. That's an amazing appetite for risk. And what about if we look over the last month? Again, if we look over the last month, ARK has handily outperformed the NASDAQ, which came in second. That's good. The S&P and small caps, third and fourth, and then the Dow last. But you can see the returns over the last month are very, very healthy here. And what if we look back year to date, so almost 1 year back? Well, you can see we had a very well-formed bottom here, and then things shot higher, which is what you want to see coming off the bottom, and then they moderated a bit. So this is a very, very healthy-looking set of returns over the past year to date. Nothing to complain about here. And how does this show up in the bottom dynamics? Well, if we look at the bottom dynamics and you go back a few weeks, you can see we had a very nice bottom forming indication here. This orange line, the bottom forming indicator, was up here in the mid 90% range, and the confidence level was very, very high. So very, very nice bottom forming indication here. And by the way, that happened at this most recent bottom almost a month ago. Then what happened? Well, then we got a very strong bottom confirmation here. The blue line's the bottom confirming signal. And in order to have a bottom confirmation, you need, again, the confidence level to be very high, which it was here. And in fact, last week, I said at this point in the graph, and where are we now? Well, the bottom confirmation signal is moving higher. The confidence has dropped way off, but it's also starting to go higher. So to me, this looks like we're going higher next week. And you can see that's exactly what happened. Now, we didn't have a rip-roaring rally, but the markets went higher from when I made that prediction. Now where are we? Well, now where we are is we still have a very, very high bottom confirmation level here. In fact, it's at 100%, but look what's happening with the confidence level. The confidence level is not only low down here, but it's falling. This makes me a little bit afraid that we could see a soft market, at least in the early part of next week, maybe even a down market. But I'm not going to call that with a lot of confidence here, but that's what I see in this chart. And why is that happening? Well, remember, the common wisdom is that no one ever got hurt selling at a profit. And the markets are up big for the month, for the week, for the year, and people feel inclined to take a profit and lock those profits in. Well, that common wisdom works unless you look out over 5 to 10 years in the future and realize the investment they sold for $100 is then going to be worth maybe $500 or $1,000 per share. So how wise is that? And are you really being an investor by doing that kind of thing? You'll have to decide for yourself. And what if we look at risk versus opportunity? Well, if we look at risk versus opportunity, we have a very nice picture here. You can see where we're currently at. The opportunity level has come from a very low value of below 50 to now approaching 80. This is really, really good. And risk acceleration went from a high back here of almost 90. Now it's down here below 60. This looks very healthy. And if you'll remember, I think it was last week or the week before, I said, yeah, risk is up here at a very high level. It's above 90, but it was falling. And I said, if we look, ahead a week, you're going to see that it'll continue to fall. This is very much a lagging indicator and probably won't fall down here below 70 till next week or the week after, if things continue to go well. Don't wanna let you down. And what about equity versus safety? Well, if we take a look at equity versus safety, this couldn't look better, quite honestly. Let's take a look at the NASDAQ 100, the riskiest assets in this table. And you can see, if you'll remember from my previous videos, there was a lot of volatility here. The NASDAQ 100 was down here at the bottom, then it was up, and then it was down, and then it was up. And you can still see some of that here. But what's happening more recently is we have a very nice, consistent move to first place. This is exactly what you want to see. And in fact, you can see that the Dow, small caps, and SPY are all up here in the top half of this table. This looks very, very, very healthy. And if we take a look at cash, exactly what you want. It's now down here in 8th place. This is great. I'm very comfortable with this. And again, I'll show you the small caps. You can see that they were way down here, and now they've moved up very, very nicely. This is a very healthy looking risk appetite for equities and for treasuries. Let's take a look. So if we look at how safe haven assets, short-term, intermediate-term, duration treasuries and cash, you can see they're all down here in the bottom of this table. This looks great. And then if we look at the higher risk treasuries, you can see they moved up very nicely here. This is what you want to see. This is a healthy looking treasury market with the longest duration treasuries way up here, next longest here, intermediates here. Now cash is above short duration, but I'll take that. This looks very, very healthy. No complaints. And what if we look at the buying and selling pressure for equities? Well, interesting picture here. You can see that we've had nice rallies in all of these, all of them, every one. Very nice rallies, as I showed you earlier. And you can see that the buying pressure back here at the bottom started going higher for the Dow, same for the S&P, same for the NASDAQ. Actually, for the NASDAQ, it started moving higher before the bottom happened. Boy, was that an indicator? And then continued moving higher and is still moving higher. And then you can see here for ARK, it's been a little more choppy. But what's interesting here is the selling pressure, this orange line, started increasing back here. It's also a little bit higher here for the S&P. It's a little higher here for the NASDAQ 100, and it's sort of moving a bit higher. It depends on how you look at this. It's kind of more going sideways for ARK Invest. So we could be taking a breather here as you see these buying pressures falling off here, except in the case of the NASDAQ 100. But in all the other cases, the buying pressures are dropping. And what about small caps? Again, very similar picture to ARK. The buying pressure is falling off here and is about to go below the selling pressure. So we could see some softness in the next week, as I mentioned earlier. And what about sector rankings? Well, if we take a look at sector rankings, remember these move very slowly. They're very slow to respond. But what I like here is if we go from last week up here on the top, you can see the cash has moved down. Treasuries have moved down. Consumer staples has moved down. Consumer discretionary has started moving up here. This is starting to look really good. And remember, these react very slowly, just like that risk indicator I showed you earlier. But what if we look at sector rank acceleration? So these tend to kind of give you more of a view of where we're headed or where we are rather than where we were weeks ago. And you can see what's happened here. Consumer discretionary has moved up. Gold has moved down. Cash has stayed put. And treasuries look very good. 20-year treasuries were down here, and now they're ranked ahead of 5 to 7, so intermediate treasuries and what I call intermediate to long treasuries. So the treasuries are starting to look healthier here, and equity risk appetite is looking very, very healthy. You've got technology up here at the top. You've got semiconductors here. They moved up from way down here, so that's a very, very healthy move. And where's ARK Innovation? So ARK Innovation was here. Yeah, ARK Innovation always kind of makes me look silly here because it either stays flat or goes down when things are improving. We'll just have to see how this plays out. So now let's take a look at the Treasury market. And you can see we kind of ended up the week sideways to down a little bit, just very slightly down. So tried a nice rally here until Friday, and then Treasuries fell off on Friday and ended the week just slightly lower. What about over the last month? Well, over the last month, a very healthy looking risk appetite for Treasuries with the longest duration Treasuries EDV. Let's scroll this up a bit so you can see it here. With the longest duration Treasuries EDV up almost 10% for the month. That's a really good return for something that's fairly low risk. And then what if we look at year to date? Well, year to date, we're still underwater, but you can see we've had a very nice rally off of the bottom here, and hopefully that will continue going forward. And how does all of this show up in the buying and selling pressure? Well, an interesting picture here. So you can see we've had very nice rallies in all of the duration treasuries here, just like in equities. But you can see some interesting behavior here in the buying and selling pressure. So if we look at what happened on Friday, as I pointed out, all of these treasuries, short, intermediate to long, and long, all dropped on Friday. But look at what happened. While they were dropping, buyers were stepping in and buying. You can see the buying pressure increasing in every single instance here. This is really healthy. This is buying on the dips. These are the people that have a fear of missing out. Things have gone up. They see their opportunity. Treasuries dropped, and now they're jumping in to buy. Hopefully this will continue going forward. This looks very good. And what about gold? Well, yep. Gold had a huge rally here with all the contagion in the Middle East. Then it kind of pulled back, and now it's sort of rallying again very quietly here. I don't know what to say about this. The buying pressure certainly has come off of the bottoms here and is moving higher. The selling pressure is in somewhat of a decline. So this looks good for gold going forward, but I just don't know what the catalyst is. There's no inflation, and unless things start to heat up again in the Middle East or somewhere else, like Ukraine, there's really no geopolitical risk that would drive gold higher. Now, you're probably laughing. You're saying, Calvin, there's a lot of geopolitical risk right now. And there is, so maybe that's all there is to the story here. And what if we look at Bitcoin? Well, Bitcoin has been on a tear. You can see it. It's just rallying very nicely here. What I don't like is that you can see the buying pressure. Obviously, this spike was ridiculous, off the charts, literally. But you can see even since then that the buying pressure has been in decline while the selling pressure has been quietly increasing. So we're kind of not in a transition point here yet, but we'll see where this goes. Maybe it'll take a breather and go sideways to down for a while, then continue higher. Nobody knows, but this is what I see in Bitcoin right now. It will also be interesting to see what happens with the BlackRock ETF applications, and if the SEC approves them, that could push this a lot higher, if these get approved. Well, as you can see through this analysis, equities continued the move higher that started almost exactly a month ago, while bonds have gone sideways this past week. It's my hope and belief that inflation will continue heading lower. Now we just need to know how the Fed will deal with deflation if they take things too far. Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
Stay up all night, gotta work now. Make up my mind, then it turns around. Say that I'm fine till I burn out. Thinking this money sounded so nice. Ambush here in the strobe lights. Pay anything for the high price. This life feels like the sunny water. Wet my lips, but the sauce is stronger. Pour it out, if I'm being honest. It's just not everything you promised. Running out, drying out, what did you say? What did you say when I told you? Maybe this wrist wasn't gold proof. Packing my bags like it's all true. Hard to make friends when I'm focused on all these bars that I'm holding. I like the cold but it's lonely, yeah. This life feels like the sunny water.